ETF fans, this is Will Smith with ETF Action. Today is November 27th, 2024, and for today's video insight, we are going to quickly build a 50-50 model portfolio comprised of only active ETFs. Now, to get started, we're going to quickly identify our active ETFs that represent or provide exposure to several different asset classes and categories across the ETF universe. And then figure out our weights in order to give it that 50-50 balance from an equity and fixed income exposure. So to get started, we're going to go to the Navigator tool. And if you haven't used the Navigator tool before, it's a extremely dynamic and effective tool where you can sift through and explore different asset classes, categories, composites of the ETF universe, and also gain some knowledge on the average total return of these categories, flows for the categories, and you can also go all the way down to that ETF level. As an example of this dynamic functionality, I'm going to focus only on active ETFs. So here, I'm going to open up our our classification, and we can see discipline here. I'm going to right click and do group by discipline. Because I'm only focused on active ETFs, I'm going to move this to the front so we can ignore the 2100 passive ETFs. Now I'm going to open up our active ETFs and pick a few asset classes that we can get exposure to. I'm going to take the largest ETF in each of these categories. So I'm going to start with equity size and style US, and we're going to do some large cap blend. So I'll do DFAC. From a small cap blend, I'll do DFAS. Mid cap blend, FMDE. And that will do it for our equity or US size and style. We're going to get some international exposure. So we're going to do global ex-US large cap blend. So DFAI. And then also some emerging market large cap AVEM. Just to provide a little bit more exposure to a couple of particular sectors, I'm going to open up equity, sector, and industry. And we're going to give some global real estate exposure with DFGR. And then also some exposure to the ultra large cap, high growth tech stocks via MAGS. So that'll do it from our equity exposure. Now I'm going to focus in on fixed income. I'm going to keep this pretty simple on the fixed income side and just do core enhanced, FBND. And then municipals, intermediate, I'm going to do CGMU. I'm also going to provide some exposure to the largest active ETF from a assets under management standpoint and get some synthetic income exposure via JEPI. And then lastly, we're going to throw in some commodities. So broad-based, I'm going to do PDBC. So I know we went through those fairly fast, but to give you an idea, I've pre-made this upload file where we can see our category here and our select tickers. As you can see, I've made this a 50-50 blend just to provide a little bit of balance from an asset class exposure. I'm going to delete this column because we do not need that column for our upload file. So I'm going to delete that, I'm going to save it, and now we can go out and build our model. So we're going to head over to Model Tools and the Model Builder. We're going to choose Model. And here we can do Active 50-50 ETF. Rebalance frequency, I'm going to do quarterly. And for our benchmark, I'm going to do our Global Core 50-50 benchmark, which is a 50% blend between ACWI and AG. As you guys know, these are the only 4 parameters that are required to build our model. All these down here are for your reference and can be updated later from the Model Manager page. So now I'm going to press Next, and I'm going to hit the Upload CSV button and upload our holdings. Here we can see, I'm going to open this up to see all my holdings at once. You can see here that this is going to have a fairly limited track record because our system pulls the earliest common inception between all of the holdings to create the inception date. If we want to extend this, we can add in proxy tickers here to prolong the back test for this particular model. So in this case, I am going to do that. So for mid cap, I'm going to do IJH. I realize that's not an active ETF, but just to extend the back test a little bit, I'm going to use IJH. For the mid caps, you can see another 2023 here, MAG 7. So I'm going to do XLK. And we've got a couple 2022s. So for municipal bonds, I'm going to do MUB. And lastly, right here, I've got real estate. So I'm going to do XLRE. So that should extend our back test to 2021. So it gives us a little bit longer history just to perform some additional analytics. So again, we've got all of our weights add up to 100. We've added in our 4 proxy tickers. Now I'm going to press submit and create our model. So as you can see here, we're going to dive in a little bit. It's going to take us to my marketplace and open up the model analyzer tool. Here, the overview tab is going to give you some high level information on those ETFs that we just selected for our model, as well as some one-day performance and some look through analytics from an acquired fund fee perspective, TTM yield, and asset class breakdown. Performance wise, let's see how it does against that 50-50 ACWI Ag blend. We can see we've got a little outperformance on the 1 year, a little bit more outperformance on the 3 year, and we can also see from an annual basis, been pretty close and actually underperformed in 2023. But again, as you all know, anytime you want to compare this against another model, ETF or mutual fund, all we have to do here is type in that ticker or name, press enter, and all these charts will update. From a risk perspective, you can see we've got much higher annualized return on a 3-year basis relative to AOM. I'm going to reset this back to our benchmark. Again, a little bit more annualized return, some alpha there. Composition wise, we can see we are a little bit low on the fixed income exposure, but the PDBC and the JEPI exposure, which we included in fixed income, but our asset class breakdown has it in cash and equivalents and other. From an equity perspective, we can see we're a little underweight tech, but overweight industrials. We're also a little bit underweight developed ex-US relative to that benchmark. Fundamental wise, yield's pretty darn close. Same with our margins here. A little bit cheaper from a valuation standpoint relative to that benchmark. And, if we're interested, we can click on Tools and Reports, run a proposal for this model, type in all of your settings here, press submit, and that will be sent to your email inbox for your use in prospective client meetings. So again, just as a recap, from the databases dropdown, we utilize the Navigator tool to identify active ETFs that provide broad-based exposure to select asset classes, composites, and categories within the universe. We then built out our upload file, which is just ticker and weight, making sure those weights add up to 100. And then we built our model from the model builder tool and then did some very quick high-level analysis of this model from my marketplace and the model analyzer tool. We hope you enjoyed today's video insight. Please do not hesitate to reach out if you have any questions or would like to schedule a demo. Feel free to email us at team@etfaction.com. We hope everyone has an excellent Thanksgiving holiday, and thank you for tuning in.